I wanted to take a moment and talk to you today about Russia and Ukraine. I've gotten a few questions about it, so I wanted to speak to some information that I've come across that I think might help give some perspective about what happens to the stock market during geopolitical events. So LPL has put out some really great research, of which I'll put in this slide here. It shows that what happens to the S&P during a typical geopolitical event is shown here. Overall, the markets go down about 4.6% based on all these events shown in front of you. Right now, this week, since Russia has invaded Ukraine, we're down about 5% as I'm recording this today, just in the S&P 500. It feels a little bit more than that just because we went through some market correction based on earnings and pricing in inflation as well as interest rates rising. But just based on the geopolitical event itself, we're down about 5% in the S&P, which is just over the average based on this chart here. Now, the interesting thing is what you see to me is you can immediately eliminate some of these. We have things like Pearl Harbor, which this isn't. This isn't also 9/11. So some of those outliers you could arguably say probably aren't applicable. You could also argue that some of them are pretty innocuous as well on the short side, which may offset the outliers on the top end as well, probably averaging about the same. The fascinating thing, though, is the days column on the far right, the bottom as well as the recovery. So the bottom average is 19.7. So just about 4 weeks, three to 4 weeks of days to hit the bottom in an average geopolitical event, and 43 days for it to recover, again, on average based on these. So we're really looking about maybe a month and a half on average to hit the bottom, come back up and be back to where we were. So just wanted to provide this to, provide some guidance and some thoughts on where we might be going in the future. Again, it's not a clear picture because we do have other things happening in the economy as well. But I thought this was some interesting research that I came about when trying to get clarity for myself and how I'm continuing to advise clients. So there's some things that we can do and we can look at that are, typically smart things to do whenever the market goes down. Things like consider Roth conversions. If you were looking at doing a Roth conversion anyway during this year, a time when the markets drop down is a great time to look at doing that, as well as increasing contributions. By increasing your contributions, you're buying while the market is down and kind of on sale. So those are all some pretty smart things to do, as well as a number of other things we've probably talked about if you're currently set up as a client here. One of the things I wanted to also mention was just the idea that we're not just owning the S&P. So this is just the S&P 500, which is typically the benchmark we look at for the US market, but there's other markets to look at. So a lot of the times in portfolios, we're not going to be affected as much as this shows just because we own other stuff. For example, the bond markets this week, while the S&P is down about 5%, the bond market has been flat. So it went down and came back up. So we are just the same as before Russia invaded Ukraine. So just some things to consider when you're thinking about listening to the news and hearing about all the terrible stuff going on. Here's the facts about market declines and when things can turn around. And that's why it's really important to have your plan structured in the right buckets, right? We want some money in an emergency fund to take care of anywhere between 3 months up to 2 years of expenses just in liquid cash. And then on top of that, we have that safe bucket for bonds, treasuries, things that don't move as much as these. And then on top of that, we have our more aggressive portfolio, which is in the S&P, but also in things like the Russell 2000 and international indexes as well. So if you have any questions, please feel free to reach out and we'll be happy to talk anytime about this. But hopefully this gives a little bit of clarity as to what's going on and what we can expect, at least when it comes to geopolitical events.